Once again, ladies and gentlemen, boys and girls, we got the real estate market beating up the market. We got the stock market at all-time high, and we got cryptocurrencies going all through the roof, Dogecoin. So we got real estate market, stock market, everything going to the all-time high. And if I get one more phone call, text message, email saying, Prince, what is going on? What do you think is going on with the market? So, ladies and gentlemen, what you're seeing today, I'm going to give you a prediction of where are we in this market cycle and all of the good stuff like that. But ladies and gentlemen, if you haven't done so, go ahead and make sure hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show, late night show, by the way. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live, all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time. I definitely know you guys and girls don't have a lot of time. So we're going to jump straight into it. So right now, ladies and gentlemen, there's no secret. People telling me, Prince, Dogecoin is going through the roof. Cryptocurrencies are going through the roof. NFTs are going through the roof. Stock market, just Dow Jones just hit an all-time high. Where are we at right now? Real estate market is on fire. Everybody's thinking, Prince, we are in a peak. What are we getting ready to do? What's happening? All of the good stuff like that. Ladies and gentlemen, I'm going to be talking about the market cycle and how the market cycle affects where are we today as investors, and my belief and my theory that's based on factual evidence that you may tune into. Where are we? Because if you know where you're at in the market cycle, and you do a bit of reading and studying, you can know how to invest into it. Excuse me about that. All right. So if you are checking this out live, please comment. Tell me where you're from, where you're catching this at live. If you're catching the playback, thank you for tuning in. Don't forget to hit that like button as you come through the door. But ladies and gentlemen, without further ado, we're going to jump straight into it. So we already know, if you don't know, the market cycle. Market cycle cost me at least tens of thousands of dollars, not understanding the market cycle back in 2008. So we have troughs. At the bottom of the market, you have a trough. If you can't see me talk about this, let me put this microphone, making sure y'all can hear me pretty good. So at the bottom, you have a trough. Y'all let me know how my sound is if you're catching this live. Very late night, spontaneous show like the Investor Show always is. So at the bottom, you have a trough. Then you go up into an expansion. You hit a peak. You hit a decline, back into a trough, expansion, peak, decline. So in the comment box, I want to ask you guys and girls, where do you think we are at in the market cycle? So let me see what y'all are saying. Are we in a trough, expansion, peak, decline? Which one are we in? And we're going to go through that. 1 second. Here we go. I'm going to look it up because I did a poll on the YouTube channel, and I'm going to tell you what that poll was, where people believe that we're at. Let me look up that poll. If you haven't participated in that poll, please go ahead on over. So right here today, we have 38% of the people say that. Well, we have 4% say we're in a trough. 38% say we're in an expansion. 21% say we're at a peak. And another 38% say we're in a recession. So 38% says expansion. 38% says recession. So we're tied at expansion and recession. That's kind of weird, But comment and tell what you think. I should open up my phone lines. I always say, yeah, I'm open up the phone lines. And I forget about opening up the phone lines. But, we'll get that the next time. Anyway, ladies and gentlemen, so we're going to talk about that. What are the market cycles? What does what in a market cycle? So right here, I'm going to be coming in from my a book that I marked up that you can see here. I have it all written down here, tagged up. So right now you have, I'm going to tell you right now, my belief is that we're in an expansion. I think that we're in the early stages of an expansion. That's my belief. So one thing, here we go. So you have an expansion. You got the early stage expansion. You have the middle stage expansion, late stage expansion. At the late stage of the expansion, that's when you hit the peak. Then you go down into a recession. So now here are the characteristics of economical characteristics. This is what I'm backing this up on. Let me see what you guys and girls saying before we get into these market cycles, and I break it down. And once I break down these market cycles, you're going to know, hey, exactly what does well in what particular market cycle. So right here, where are we in the market cycle? Are we in the trough, the expansion, the peak, or decline? So let's see what y'all say in the comments over here. Beat for life out there in Phoenix, Arizona. He says, shout out to the rapper Nas, who netted $100 million yesterday from investing $25 million into Coinbase back in 2013. What's going on? What's going on there? Congratulations to him. Congratulations to him. Max B said, are we in a trough? Right? Max B, what's going on to my guy, Max B? Miss Nana Power says, hey, Prince from Nevada. Nice to see you here. Andrew. I don't know how he's saying it. He's saying, oh, how? Andrew, thank you for tuning in. And then we got D-Jax over there on Twitch that says, D-Jackson confession tape. He said he thinks that we're in a peak. Okay, Nana Power says, I sound good. Okay, ladies and gentlemen. Let's go to my belief that we're in a current expansion. Got to pay attention to economical data. I'm not going to pull up a whole lot of economical data tonight. I'm going to reference it. Okay, I'm going to reference it, but I'm not going to pull up a whole bunch of economical data tonight, but we're going to talk about it. And I'm going to tell you where you can go get the economical data because we talked about it here on the show. One, understand where's unemployment. Is unemployment rising? Unemployment declining? Where is unemployment? That's a lagging indicator. Number two, where are interest rates? Are interest rates high or low? Interest rates are at a historic low. The housing market, is it a buyer's market or a seller's market? It's a seller's market, meaning that people are out there buying houses to run the market up. Low interest rates, people are buying a high market. Also, what report came out on Tuesday that everybody was so scared about that you hear the Federal Reserve talk about? Inflation. Everybody has to wonder about what's going on with inflation. When you see low interest rates, high market of people buying, you see unemployment dropping. Everywhere I drive down the road, you're seeing Sonic and McDonald's, they having hiring problems. Fast food places having hiring problems. You're seeing companies all up and down the places, unemployment is not a thing. Now, I won't say not a thing. It's definitely unemployment, but there are a lot of jobs. They may not be the best paying jobs. They're not, Fortune 500 company jobs that I'm seeing out there being thrown around, but you see a hiring push. You can see Amazons can't keep drivers. UPS, FedEx, they cannot keep drivers. They're giving people all types of things to stay with them and to grow and expand, right? So when you look at that, you got to ask yourself, unemployment. I'm looking at unemployment. Unemployment numbers came out. Look at the unemployment report that we went over here. And they said the fastest growing sector in unemployment dropping was leisure and hotels, anticipating travel. Unemployment. Interest rates, all-time low. Mortgage applications, people are buying. Look at the Mortgage and Bankers Association report they put out practically every 2 or 3 days. You're seeing mortgage applications applying. Who's buying these houses? You're seeing unemployment drop. You're seeing low interest rates, and everybody is worried about inflation. So let's go through these characteristics. The expansion, the characteristics of expansion: low interest, low increasing inflation. Early stage, low increasing interest rates. Don't we have very low interest rates? Are they slowly increasing? Now, let's back this up with earnings reports. We're walking into earnings season, ladies and gentlemen. We are making it into earnings season. Why is earnings season so important for investors? This is the time investors get the opportunity to really see people put up or shut up, right? We get to see who's doing what in the zoo. Who is who in the zoo? How much money are you making? Are you making any money? Are you telling us anything? What's going on with your company? This is a good thing about investing. We get to see where the money really is at. So companies are making money. In the early stage of investing, you look at things like consumer credit. Firms with consumer credit does very well. Ladies and gentlemen, I'm going to pull this up here. I should have already had it pulled up. We're going to take a look here. Consumer credit. What is consumer credit? Bank of America. Bank of America just released their earnings. What did Bank of America say? Now we're going to get into cryptocurrencies, ladies and gentlemen. We're going to talk about that as well. So right now, I believe that we're in a trough. I think that we are in a trough coming out of the early stages of an expansion. That's my belief. But then again, y'all know me. I'm a bullish person. I will always be bullish. This time last year, when y'all was tuning into the show and everybody was like the world was coming to an end, I was a little bit skeptical, but I said, no, we'll be all right. It's time to invest. And the people who invest in hell, they're pretty happy. All right, earnings release. Okay. I want to see their press release. Okay. All right, so I'm going to share my screen here. This is Bank of America. And I'm going to get to y'all comments in 1 second. For the people that are commenting on this show live, thank y'all for tuning in. Y'all are the real MVPs. So right here, we're looking at Bank of America, cynical companies, right? You're looking at credit, consumer credit. How much credit are we using? I didn't mean to pull this one up. Sorry about that. Y'all give me 1 second. They just released their earnings like 2 or 3 days ago. And if y'all remember, as I told everybody, as interest rates start to incline, as interest rates start to increase, you're going to see the financial industry start to benefit. So where am I at right here? Where's my PDF that I just have? There we go. Trying to hide from me. First quarter 2021. Bank of America right here. Bank of America reports a Q1 net income of $8.1 billion. Earnings per share, 86. Provisions for credit loss benefit, 1.9, reflecting the 2.7 billion reserve release. The CTI1 ratio improving 11%. Average deposits are up 366 billion. So right here, ladies and gentlemen, deposits of up to 25 billion. Loans are down. Loans are down 8% to 28 billion. Record consumer investment assets. So record consumer assets, investment assets are up to 12 billion, or 53% from 32 billion, driven by market valuations and clients flow of 25 billion. All right. So now you got the global wealth. I don't want to look at, let's just look at global banking here. Global banking, record firm-wide investment bank fees, deposits raised, okay. So it's looking pretty good for the financial industry. Bank of America was the first ones to come out. Finances are the first ones to come out when earnings come out. You're always going to see Bank of America, JP Morgan, things like that. So as you see interest rates start to creep up, as you see inflation start to creep up, you're going to see the financial industry starts to benefit. So this lets me know we're in a very low interest rate society with increasing interest rates. Consumer credit, the housing market. Look at the housing market. Who are giving out houses? You go over to the Mortgage and Bankers Association. The housing market is booming. I purchased a home. I purchased land. I own land and I own a house and land, all this good stuff like that. But I don't know what the land is doing because I don't get a evaluation of land every day like that, nor do I really care to. But with the homes, you can see the houses that are selling around me. The housing market is just going up across the nation, right? So when you look at that lets me know unemployment. You're seeing companies, you go into Indeed.com, you looking, people want to be an Amazon driver, a FedEx driver, a fast food. When I was a kid, it was hard to get a fast food job. That was considered a good job. I was happy when I got my first job at Domino's. I had to compete to get my job at Domino's when I was in high school. I was in the 10th grade when I got my first real job, and I had to compete. And it was hard. It was sometimes my hours got cut. I got laid off and things like that. But you look at this economical side, it's very easy to get in there, right? So let's see what the CEO has to say. The CEO of Bank of America said, our team produced an exceptional results this quarter. Record or near record levels of deposits, investment flows, investment banking revenue, digital users and client engagement. Meanwhile, brand loyalty, customer satisfaction, and employment engagement reached a new high. While low interest rates continue to challenge revenue, think about it right here. They say, while low interest rate, here's the gem. Bank of America said, while low interest rates continue to challenge revenue, Credit costs improved, and we believe that the process of health crisis and economy point to accelerate the recovery. The strength of our balance sheets and our complementary divides of businesses and talent teams positioned to perform well. And okay, right here, he says, while interest rates are low, continue to challenge revenue. So they're saying since interest rates are so low, that's hurting the banks. What do you think interest rates are about to do once the economy starts to recover more and more and more? You can see it right there in Bank of America. So that lets you know you have low increasing interest rates right there. Unemployment. We just saw the unemployment report. We went over the unemployment report. You can go to bol.gov, the Bureau of Labor Statistics. They reported unemployment had dropped down to 6%. When you look at the housing market, it's going up. Look at cryptocurrencies. People hear me about Dogecoin and things like that. Now let's get into cryptocurrencies. I'm going to bring that up now. I'm just putting Bitcoin. That's the easiest one to write with one hand. I'm going to put in Bitcoin. So we're going to get into Bitcoin next. Let me see what y'all saying in his comments. Oh, Antonio, he says, what's up? He says, good evening, investing family. What's going on? Hassan, thanks for tuning in. D Jackson says, as a trucker, I'm seeing a lot of truck stops looking for workers from cashiers to mechanics. Exactly. There you go. They can't keep workers. So there you go, ladies and gentlemen. You can pull it up. Just pay attention to what's going on around you. Pay attention to the Bureau of Labor Statistics when they're telling you unemployment is drawing and they just can't keep workers. People just can't find workers. People just don't want to work. A lot of people become podcasters. People are YouTubers. People are Instagrammers. People are making a bunch of money off of cryptocurrency. So this is what you got to look at it, right? We're going to get into that. Wouldn't these earnings mainly be based from the stimulus checks and quantitative easing? Yes. A lot of these earnings, you got to think about it. The government just put out, I don't know, how much was the first $1 trillion plan? I don't know. We're on what, stimulus package number 3 now? The government just put $50 billion into the economy. Where do you think that money is going to go? People's savings account? No. You're seeing that money being flooded into real estate. That money is being flooded into stocks. That money is being flooded into cryptocurrencies. People are sitting at home collecting stimulus checks and unemployment. They get unemployment checks and stimulus checks, and they're probably going to get another round of stimulus. And as they push this money out, I mean, you just threw $50 billion. Where do you think it's going to go? It got to go somewhere. The flow of money never dies. It just goes somewhere else. So I do believe that quantitative easing. Antonio, what's going on? He said, I got a nice surprise from Bitcoin today. Oh, Dogecoin. Yeah, speaking on that, let's get into that. Because everybody been hitting me up about Prince, what's going on with Bitcoin, cryptocurrency, Dogecoin. And so I have the same premises. Do I own Bitcoin? Yes. Do I own Dogecoin? No. I think I got Bitcoin and Stella or whatever. That is speculating. As a person, somebody come to me and say, hey, Prince, just regular Prince. Hey, Prince, man, what you think about it? Should I put some money on? I'm like, yeah, throw $50 on it. Who cares? It's the same philosophy I would tell somebody who was in the 7-Eleven getting ready to buy a lottery ticket. Hey, go ahead, throw something on it. Who cares? I cannot sit back and make an investment because I don't know. I don't know what Dogecoin, you take Dogecoin. I don't even know who the CEO is. I don't know where the headquarters is at. I don't know who's making it. Russia could have it. China could have it. My next door neighbor could have it. He could created it. I don't know if it's real. I don't know if it's fake. I don't know. I don't know nothing about it. I cannot sit down and make an educated investment over any of the cryptocurrencies. It's thousands of them out there, right? Now, I will say Coinbase I do like Coinbase. I do like it as a company. It's financially stable. It's financially profitable. It's at $300 something at IPO. Now, Coinbase, I will be going to. Silvergate, SI. I'm rocking with Silvergate. Riot, kind of sort of with Riot, but Silvergate, the fintech company, I will take you. Riot, I got some of that somewhere in my portfolio. And Coinbase will be added to my portfolio over time, right? So those are the ones. Everything else, I don't know. This stuff is just like, it can go in there, it cannot go in there. I don't know. When somebody called me and say, Prince, should I invest? I am your client. Should I invest into this? I'm like, dude, I cannot, as a licensed professional, I cannot recommend it because I have nothing to base it off of. I don't know who the CEO is. I don't know where the servers are at. I don't know who's this or whatever. Is it making money? Yes, but I will have to tell somebody you can speculate, throw something on it. Throw $50 on it, $100 on it, buy some random. It's thousands. It's literally probably like 10,000 different cryptocurrencies. I don't know which one is which. I tell people going in, just like when I go to casino. When I go to Vegas and I go to casino, I might put something on number 8, number 7, throw something in the field. The dice is roll. I triple my money, double it, or whatever, cool, or whatever. Person don't crap out, great. If I double or quadruple my money, great. If I don't, I don't. But I'm not going to go in there and be like, hey, I'm going to make an investment into the crap table. And the reason why it's a crap table, because there is unregulated. I don't know who is who, what is what in the zoo. But if you're going to go to that space, I tell people go with the biggest one, Bitcoin. That seems to be like the sturdiest one, because you always see people buying Bitcoin. I won't rock with that. Everything else, I don't know. So let's see here. Let's see what y'all say in the comments. Marlon Williamson said, how do you feel about Coinbase? What is a good price to get in? Coinbase. Now, price, I got to do a little bit of math. And this is what I would base the price off of. I think Coinbase evaluation is at $1.1 billion, right? Let's take a look here. Let me do a quick little Google search. They put out an S10 report. You know what? Screw it. Let's do it. Y'all want to go there. I'm kind of feeling it tonight. What is we're going to look at what did Coinbase report as its total assets? What is Coinbase total assets that it reported on this S1 filing? Now that, of course, that has changed because they sold a bunch of stocks today or yesterday. So they, of course, the value has gone up. Now, the thing I will say this, let me get to this. I'm going to come, I'm going to finish this up and I'm going to get into the Nas topic. Pete for Life, if you're checking in, let me know if you are on here live, Pete for Life, out there in Phoenix, Arizona. If you are checking this in live, please let me know that you're out there, because I want to talk to you about that, because I think that's very deceiving what people are doing in the media, but that's fine. I'm just going to give you my personal take, and, people can live with it or do what they want to do with it. Okay. Coinbase form. Let me see. Yes, one. Now, of course, this number is pretty obsolete now. Okay, let's see what we got here. I got to see, what is Coinbase symbol? What is Coinbase symbol? I got it on here somewhere. Give me 1 second while I look up Coinbase stock symbol. Some of y'all probably know off the top of your head. I know they went down a little bit today. Now, the day it came out, of course, I wasn't on it at all. I was like, I never buy IPOs the day of. Now that it's kind of people, or the excitement is kind of wearing off, then I'll start to look into it. Come on, what's Coinbase symbol? I know I got it on here somewhere. Why are you trying to hide from me now, Coinbase? Champ. Okay. Okay, well, I look at it this way. Goodness. I know I had it on here. Okay, what I gotta pull it up. Is it CO? Oh, it's coin. Yeah. How did I pass that? Coin, CON. Okay. Let's put this thing in alphabetical order. And I still miss it, I bet. Let's see. All right. So Coinbase, let me go back to where I was. Okay. Everything coin. Now I act like I don't want to pull it up for me. But I don't want to dry out the show with trying to pull this data up. But I'm going to tell you right now. You're right. I see everybody saying coin. I got you, Max B. I definitely appreciate that. I don't feel like pulling it up right now. But the thing about it is, I would have to look at what are their total assets of the whole entire company. Now, they have gone public. And since they've gone public, of course, they just sold a bunch of stocks. A bunch of people just gave them billions of dollars out the blue. So the assets of the company will climb dramatically. So when I look at the total assets of your company, now I will look at what is your stock price, what are your assets of the company, and then I will compare you to your competitors. Right now, Coinbase doesn't have a publicly traded competitor, so it may be a little bit hard to do that for Coinbase right now. But at $300, I think their market cap now is about 100 billion. I would take them. I would take them. I don't know the perfect price on it, but I do like that idea of Coinbase. They're already public. They already are profitable. They are the brand name in the crypto space. They are very easy to use. I have definitely interacted with them before. So I think right now they had a driver's seat right now. So, and they're already profitable, so I can rock with them. That's very rare to find an IPO that's already profitable, already making money. So it's at like $325, if I'm not mistaken. At $300, yes, I can. If Coinbase can Amazon this thing, the crypto world, I think it'll be. I can see it easily over $1,000. So, ladies and gentlemen, you got to think about when we see high stock prices. A lot of us think, man, that's expensive. You got to realize the value. Every time we print money, the value of the dollar is falling and falling and falling and falling. So, yes, today, a $300 stock today, that looks crazy 10 years ago, right? But today, that's kind of the norm. That's not really that expensive. You know, Amazon is 3,000, Google is 2,000, right? Facebook is 3,000. What are the total assets of Facebook? Let's look up Facebook. Facebook is a $300 company. It's not in the Coinbase world, but you know, it's close enough. What's the market cap on Facebook? 874 billion. Man, Facebook is almost $1 trillion company. 874 billion market cap, and it's $300. Coinbase market cap at about 100 or something. Let's see. Goodness. Well, it's so new. Can't even really see it yet. Can't even see it yet already. I don't think it's nowhere near 100 something trillion. So that tells me right there. Okay, so market cap for Coinbase is 63 billion, but the market cap for Facebook is what, 10 times bigger, and it's the same price. So that itself, let's see, what is Facebook total assets? And we're getting ready to roll into earnings season. Okay, they reported ending in 2020. They said they had 159 billion in total assets. I'm pretty sure that's not. I'm pretty sure these numbers are reported in millions, if I'm not mistaken. So, of course, so I don't think Coinbase is there. So, yes, I do believe $300 is a little pricey for Coinbase right now. I think a more appropriate price for Coinbase, but you got to think about it. Airbnb and DoorDash are 150 something dollars, and they're not even profitable. So, I will say something for Coinbase is I'll probably put about I would put about 150 would be a more appropriate range. So, I do believe they're inflated. Are they excited? People are excited about them or whatever, but they are a profitable company in the hot new space that's taken off within the last year or two. So they do get that benefit, but I wouldn't be going to too cocoa for Cocoa Puffs. So as y'all coming in, y'all tell me where you're from. We're talking about where do you believe we're in the market cycle? Do you think we're in a trough, an expansion, or a peak? So now let's get to it, ladies and gentlemen. I already told you that we are in an expansion. That's my belief, expansion.
You're gonna learn today. You're gonna learn today.
So, with that being said, now we know we're not in a trough. Maybe last March we was in a trough, but we're definitely not in a trough. All the characteristics are pointing that we're in an early expansion stage. You're seeing, like somebody just said there on Twitch, hey, look, man, I'm having a hard time. Everywhere you go, unemployment is dropping. Everybody's having a hard time finding people to work jobs. You're seeing the housing market explode. How's the housing market explode? Because people are buying houses. You're seeing cryptocurrencies explode. Stock market is exploding. Where is this money coming from? The government just pushed a bunch of money in, Interest rates are very low. People are going wild. It's spinning up the economy, what the federal government wanted to do, right? Now, with that being said, now as an investor, what am I supposed to do? What are some things that are going to do well? Consumer credit. We just talked about banking, financial institutions as people borrow more money at this low interest rate and continue to buy. Bank of America said, yes, we're struggling because of these low interest rates, but when they go up, that's how Bank of America raising their hand, rubbing their hands together, waiting on those interest rates to go back up. So, all right. Good to go. All right. The next stage in the early stage, transportation. I wrote down here, airlines are going to do good. Then we're going to look at energy. Gas prices are going to start to come in. Early stages of gas, transportation, banks, credit unions, manufacturing. Also, you see manufacturing jobs growing. We just saw that on the last unemployment report. Manufacturing jobs, that's to say leading indicator for the economy. When you're seeing manufacturer workers working like crazy, that means they're producing more products. If they're producing more products, that means they're selling more products. If they're selling more products, that means wholesale people are buying more products. And why are people buying and boosting up their inventory? They're looking to sell it. We just pushed about $5 trillion between three different stimulus packages into the economy. Where is that money going to go? That money's going to go somewhere. Now, are there people struggling and having a hard time? Yes. But when I look around, I look at all these jobs. My little small time, I tell people all the time, a job at Sonic, that was a good job in high school. That's a good job, man. I wanted a job at Sonic. That was for the upper end people who got the jobs at Sonic. That was hard to get. And you had to, I had to crease up my polo shirt, tuck in my pants, stand up straight, make sure I had my hair cut, speak properly to go in there and ask for an application and turn it in, right? And you hope you get a phone call. And that was a hard job to get when I was in high school back in 2001, 2002, 2003. Now you walk down the street, 7-Eleven is hiring. Every place I go into, a 7-Eleven is hiring. Any shopping center, they're hiring. Everybody's hiring. Domino's is hiring. They need drivers. Amazon need drivers. FedEx need drivers. UPS need drivers. Right? What does that tell me? Even higher-end jobs. Oh, if you got a security clearance, they want you. I'm seeing those signs upside the road. On the side of the road, not on Indeed.com or Google.com. I was searching. I'm just going to go get some gas. And every gas station you walk into, there's a hiring sign. I didn't see that growing up. I wanted that job. To get at a gas station, that was upper echelon. As a kid, a teenager, that was an upper echelon type job. So you're seeing these jobs just come out. Then we just have people saying, hey, I'm a trucker. Everywhere I'm on the road, they just can't keep workers. Why can't they keep workers? Let me see what y'all saying in these comments before I go. Okay, yeah, P for Life. Okay, let's get into it. I'm glad you said something, P for Life. Let's go, P for Life.
You're going to learn today.
Now, P for Life, you said shout out to the rapper Nas, who netted $100 million yesterday from investing $25 million into Coinbase back in 2013. Now, that's great. Congratulations to Nas and his firm and things like that. But this is the thing they don't tell you. I fell into this. I watched Something Ventured. It was called Something Ventured on Netflix. Then I went on to Shark Tank. I gave my pitch. And I became a finalist for the show Shark Tank back in 2015, 2016, 4, 5, 6 years ago. And I had a lot of time around investors and firms and things like that. So what these companies do, especially the ones in Silicon Valley, they love to get celebrities. They love to get people like Shaq. They love to get people like this person, big names, right? Because, if you just go out there and be like, oh, Jimmy John invested in the Coinbase and he made a bunch of money, then it doesn't have that sting to it. So what venture capital funds do, they go out and get athletes, celebrities, entertainers, or whatever. So they take money and they may make you the face. They may make Nas the face, and they'll take $100 billion. And that $100 billion, they might buy 2,000 random companies. With that, not even 100 billion. Let's say they may take $10 million, and with that $10 million, they may give what's that? Two. They may give 40 companies a quarter million. They may give 4 companies a quarter million. Not 4, I mean 40 companies a quarter million each. 250,000. All these random technology companies or whatever, just give them, hey, out of 40. Out of that 40, how many do you think of those companies will become successful? Out of that 40, look at the TV show Shark Tank. It's been on the air for a decade. They talk about 5 or 10, 15 companies. All these companies did well on Shark Tank. Why they talk about these companies did well on Shark Tank? Because those are the only ones that usually become successful. They don't talk about the losers. Out of the 10 years or 12 years Shark Tank has been on TV, how many companies have came through Shark Tank? It's probably, I don't know, I would roughly guess about 300, 400, if not more. 400, 500, maybe 1,000 companies came through. Out of that 1,000, they run the reruns on the 50 companies that became successful. The other 950, they don't talk about. So these companies, they'll take $10 million and they'll spread it out over. They give 40 companies a quarter million, hypothetically speaking. Out of that 40, you may have 3 that may become worth something. You may be lucky with 3. So whatever those 3 are, that 3 could be Coinbase, it could be Facebook, or it could be Twitter. Out of those 3, they're going to run them. They're going to run it into your face like, oh, look at Prince Dykes. He invested into the early stage, invested into Twitter and blah, 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 which is not a bad thing. Out of that 40, they're going to have 1 or 2 companies that's going to become something. They're not going to talk about the other 38, 37 or whatever. If you take Nas' entire portfolio, of his firm's entire portfolio, I guarantee you what these companies do, they take money and they put it into a bunch of stuff. They put a bunch of money into it, and they know 95% of them are not going to make it. But they put their money hoping that one of them will take off. Then that one that takes off, all they do is say, "Oh, you invested in Coinbase, and you don't even know what you invested in." Then when that becomes popular, they'll tell you you were a genius. So sometimes when people do, they put their money into big funds. So what happens is they take their money. You have VCs, venture capitalists. Venture capitalists may be a group of, I don't know, 100 high net worth people. They all put in $5 million each or $20 million each. They had $20 million. Now you raise that up. They got like a SPAC almost. Now they got a blank check. Now they have $1 billion to be able to invest in the companies. They go out there, they find these companies, maybe it might be tech or whatever, and they invest into a crap load of them. Some of them probably invest into thousands of them. Thousands of them. And out of that 1,000, they may be lucky if they get 1 or 2. Same thing like the music industry. You know, they go out there, they find the best artists or the artists they think is going to sell. And out of the millions of artists that they sign, they'll get 1 Tupac Shakur, they'll get 1 Britney Spears or Justin Timberlake or NSYNC or whatever, right? And they will drive those 1 or 2 or 3 people down your throat, but they'll kind of forget about everybody else. And I said, hey, it works, it works. But what that does is it leaves the illusion to the small investor. Man, I wish I was smart as Nas company because I could have invested into Coinbase as well. First of all, that's not even going to be open to regular people. You got to be an accredited investor, net worth of $1 million plus, right? And then once you got that $1 million plus, they're going to take your money, mix it with their money. Hey, look, we got $20 billion. Then they're going to leverage themselves up to have $50 billion. Then they're going to go out and invest into some of everything. Everything that come across the table, they're going to dump money into them, dump money into them, dump money into them. And they know out of all the money they dump, less than 1% will become worth something. And that one that does take off, aka that Coinbase, that Twitter, that Facebook, they're going to be like, oh, look, I invested into Facebook 10 years ago. But really, they didn't know that. It probably was a long list of stuff that they invested in, right? Right now, you can go on Start Engine and you can take $5,000 and invest into all these random companies. Like I have. I made some investment into small companies years ago, companies now, right? You'll never hear about me talk about them because they haven't become a household name. You better want to become a household name. You're going to run all day and say, oh, yeah, I was a genius and I invested into this. But they don't tell you about, hey, listen, we dump money into a bunch of these companies. All right. I didn't mean to jump off into a tangent, but sometimes I watched that show and I became very inspired by something venture. And I went in there like, oh, I want to get into startups. Startups for high net worth people who've already made it. They made their money somewhere else. Now this is their play money. For prime example, somebody like Nas, he made his money through music. He's going to make money for the rest of his life through music. So in return, he can say, hey, you know what? Now I can go play around in doing startup and little investing to startup companies. Versus the regular person or the young investor like yourself, a lot of people that's tuned into the show, you can't come in and find these little companies. Majority of those companies that's on, what's that company called? Republic and Start Engine, those companies, 98, 99% of them are going to become nothing. And most venture capitalists know that. But they're fine with that because they're getting their money from somewhere else. So that's just my take on it. Hopefully that makes sense to y'all. All right. So, ladies and gentlemen, right here, we're talking about companies like Bank of America. We're talking about airlines, energy, oil and green energy, oil and energy, and manufacturing. Those are the top ones that I can see as we go into an expansion, ladies and gentlemen. I know people love to tell you I'm a bullish person. I'm a very optimistic person. I don't like to be a bearish person. I don't like to bet on the downside. That just makes my day feel bad. When I was a bearish person in my 18 years of adulthood, we've had 3 market crashes. 2000 .com bomb, 2008 real estate market crash, 2020 pandemic. 3. The other 15 years were bull markets. So if I'm on the bullish side, if I ride the bull, I have a more chance of being correct. So many people think of the doom and gloom. Oh, it's time to buy gold. Or some people try to chase the bull instead of riding the bull. Chasing the bull is, oh, Dogecoin is high. It's at 25 cents. I'm going to go buy it now. Tomorrow it'll be some new coin. It's hot. Now it's this new stock that took off. Now you're in Coinbase. You're into whatever is hot. The problem with jumping, AMC was hot. GameStop was hot. When you jump into the hot thing, you could be catching all these things at their particular peak. Riding the bull is consistently staying on the same track, finding companies to add along, finding better rides to get there, knowing where to be at in front of everything, right? That's what I mean by riding the bull versus chasing the bull. So look at it. I know it sounds crazy. It feels like the economy is not doing that well, and you can see the things on the television, but look at the economical data. I challenge you, go look at the Bureau of Labor Statistics, BLS.gov. Bureau of Labor, BLS.gov, and look at the last employment situation report. We did that. Employment down to 6%. They telling you that, hey, employment is looking good. Okay, now let's look at the real estate market. The real estate market is on fire. Cryptocurrency is on fire. Stocks on fire. Everywhere you go, they're hiring and hiring and hiring and hiring and hiring. What does that tell you, ladies and gentlemen? Where we at? We're in a trough. Some people say we're at a peak. No, the peak. If we're at a peak, let's go. We talked about a peak. When we're in a peak, we're going to have high inflation, high interest rates, because as the market is, as we're expanding and expanding and expanding and expanding and going up. We got Denver in the house. Nicholas Brown, Denver, Colorado is in the building. What's going on, Nicholas Brown? All right. So think about it. When we hit that peak, these are the comps. So as the market is going up, we're going to be raising interest rates. So as you see the market going up, you're going to see interest rates being raised. So we're going to have high interest rates. And since the interest rates are high, that's going to slow down inflation. So we're going to have moderate inflation. Moderate inventory. Inventory is not going to be as high. And moderate unused capacity is going to be at a moderate level on unused capacities, right? So now when you're looking at these particular companies, I'm sorry, I read the wrong one. It's high inflation, right? Because inflation is going to be going up as we go up there. As you're going to be seeing phone calls go up, right? You're going to see high inflation as the market's going up. You're going to see high interest rates as the interest rates are going to be going up. And you're going to see people with a high inventory. Why would people have a high inventory at the peak of the market? Because everything was going so well. Everybody's going to be jumping and running in, right? So you're looking at that. We don't see that. That's a peak. Are we at high, moderate inflation? No, we're not. We're at low inflation, right? We're at okay inflation. We're at lower interest rates, and we have unemployment kind of boosted and kicking. What does that say? I think we're in the early stages of an expansion. Now, after the early stage, you got the middle stage, then you got the late stage, which is considered your peak before you head into a recession. So, with that being said, ladies and gentlemen, now it's the time. Right now, what I'm waiting on, I have a hit list of things that I want to buy. I'm going to wait to the market. I'll wait till something crazy comes out. I'm going to buy. I believe here the earnings season is going to take the market into a bullish area because people have slept on Apple. People have been very disrespectful with Apple this year. People have been very disrespectful with Tesla this year. And I think this earnings season, I believe this earnings season is going to set the record straight on where these companies really are. Apple would definitely be over $140, I believe, by the end of this year. You're looking at Bank of America already setting that trend, and that's what I believe. But anyway, ladies and gentlemen, that's what I want to talk about, where we're at in the market cycle, seeing all these bullish markets going on. I definitely thank y'all for tuning in tonight. If you haven't done so already, make sure you hit that like button, that subscribe button, tell your friends and your cousins, stuff like that. And as you're learning stuff, make sure you're teaching it to your kids. With the Pioneer book series, Wesley Learns. Wesley learns to invest. Wesley learns about credit. And Wesley learns about insurance. A kid-friendly approach into the world of investing, credit, and insurance by yours truly. And while you're up late at night listening to this show and up in the morning reading your financial reports, make sure you grab your Investor Show Cup mug because guess what? It's the only way to read financial reports, and it makes you read financial reports so much better. So anyway, but yes, I believe all those companies are going to do well. So people like say he got a phone call. I'll watch the end in a minute. Okay, no problem. Antonio said Tesla to the moon. Nicholas Brown said, how do you feel about PSFE? Let me take a quick look at this before I roll out of here. PF, since you out here in Denver somewhere, PSFE. PaySafe, small, unprofitable company overseas. At first glance, I would say no. $2 billion market cap, very small, overseas, unprofitable company. I guess it's been doing good so far this year. No, it's been down actually so far this year. That's $60. It's on $13. At quick glance, I never heard of it. I would say no, Nicholas Brown. Those three things: unprofitable, small, foreign company called PaySafe. I don't know what that's about. Sound like some type of PayPal type deal, but at first glance, doesn't tickle my bells. Antonio said the government is going to build $500,000 charging stations. I think that's in an infrastructure bill. I do agree with that as well. I'm hoping, Max B, like you said, I really would like something like that. Have charging stations on my land and let people charge on them. I think that's a great idea. So anyway, ladies and gentlemen, boys and girls, I thank you guys for tuning in. Hopefully y'all got something from this episode. If you did, you hit that like button, subscribe button, comment button, all the good stuff like that. Thanks for everybody that caught this in live on a late night show. Thank you for catching me in the Investor Show, the show that comes on randomly across the globe that may catch you early in the morning, late at night, all the good stuff like that. But I thank y'all for rocking with me live. And I also want to say, check us out on Spotify, Instagram, Facebook, all of the good stuff. Twitch, we're live on Twitch as well. So we're on Twitch, Facebook, YouTube, Instagram. Where else we at? Spotify, iHeart, iTunes, wherever you can catch audio, sound, stuff like that. Go in there and hit that like button and subscribe button, and then go get your friends button and make sure they subscribe to it too, and the cousins, all that good stuff like that. Because as always, into the next video, podcast, cartoon, or whatever else crazy y'all see me doing around the globe. Y'all already know what my name is. I'm Prince Dykes. This is the Investor Show. Peace, be safe, and I'm out. Thank you.